Well, okay, so today's one is going to be a requested topic, and it's going to be based on Wyckoff smart money. So today we're going to be talking about how I personally use Wyckoff while trading smart money concepts. So background, Wyckoff is a method and technical analysis navigating the financial markets based on the study of the relationship between demand and supply. Very important. And it was developed by Richard D. Wyckoff. This man right here. So this is a picture I pulled up from Google Images and basically shows how Wyckoff works through the cycle of the market. So obviously at the accumulation phase, the markup or the expansion phase, distribution phase, markdown or expansion. And this is usually what happens generally in the Forex markets. Price starts low, accumulates, expands high, distributes, expands low, accumulates, so on and so forth. So this image right here illustrates fairly accurately how Wyckoff logic is used to identify where you are in the markets and what phase of the market you can expect to happen next using the information, the data that price displays. And I'm going to go through some of the schematics. Primarily, we're going to be looking at only 4 of them. I understand some people develop their own, or there are some other ones, but I'm going to look at the main 4, 2 out of accumulation, 2 out of distribution. So the first one looking at is accumulation. Now, this is the popular schematic used in different groups and different teachings on different platforms. So this is from an old journal. These notes right here that I used to use, because pretty much now I use Wyckoff offhead. But these are some of the notes I use to help me memorize it, and it's proven to be useful. So starting from here, phase A, we have the market selling down. Looks like an Elliott wave, 1, 2, 3, 4, 5. But I took note of this level here, PS, which I believe is the preliminary support. I can't remember all the terms correctly, so bear with me. So the PS, this is the level you want to take note of. I identify this as the last lower low before the schematic begins. So PS starts here. This is where I start my Wyckoff. And then if you notice, once the accumulation begins, the market starts moving sideways. So primarily, the only 2 ways I use Wyckoff purely for technical analysis is when the market is moving sideways or the market approaches a point of interest area. So in this case, the PS level is the last lower low before the schematic begins. So in my unique terms, I say the PS is the last level before the market starts going sideways. Then I start identifying other key levels that come to play. So next, this is a step you kind of identify, because when it comes to accumulation, you're looking at the lows. So this 1, 2, 3 spring right here is a PS, SC, SC. That's your 1, 2, 3. And then the spring comes on the next, taking the 2 lows before the SC level, which is right here. So first low, second low. So the second low ideally should be the spring below your SC level, which is what we got here. And then we have test, and then LPS, and then we have the markup or expansion. So now looking at this in detail, we have the PS, which I believe is a preliminary support. This is the level or the last lower low before the schematic begins. So before price starts moving sideways, and then you can start marking out your levels. So key levels I identify is the SC and the AR. I always do a horizontal line, just the way this one is displayed right now, and just watch what price does at that level, because you can see on the AR level, we have it touch here, and then price sort of touches it here again, comes about there again. And usually this is where the market will break, retest, or pull back to that AR level, and then continue expanding up or marking up. So I always take note of that AR level. And the SC level is just the level I take note of, so I can count first low and then second low. So those are like the steps I took just to help me grasp it quicker with my eyes until my eyes were trained enough to observe it more easily. So I do recommend doing your own study, make up your own, patterns, explanations of understanding when you look at Wyckoff schematics. So this is the first accumulation one. Next one, this is sort of a different one, because if you notice, just from the SC level, the first one, we have the first low closes below, second one closes below, that's a spring. But in this level, everything else pretty much remains the same, except that we don't have a spring. This is your LPS. So this is another accumulation schematic that you can see time to times. In my own experience, I rarely see an LPS formed. Usually we do get a spring, but it's not impossible for that to happen. So always take note of that. But yeah, that's the difference. So you can see right here, I've got 1, 2, 3 spring. That's how I know it's an accumulation number 1 schematic. Or I can have 1, 2, 3 test, which is 1, 2, 3 test. Then that's how I know it's a accumulation number 2 schematic. And this is just a bonus line I give myself. So you can see retail patterns. This sort of looks like the head and shoulder. You have shoulder, head, and then shoulder again. That head and shoulder patterns that retail is not trading. So that's it for accumulation. Just a brief overview. Distribution is sort of like the flip of accumulation generally. And the PS as well, PSY in this case, that's the level that price reaches before it starts going sideways. That's how I look at it, but that's what I use to remember it from training my eyes with Wyckoff. And then we see here, following price action, the BC high, we trade to that high, and then the AR is formed close to the low of that PSY right here. So that's something you take note of. And then you see after the AR, we trade higher to the high of the BC, but it doesn't trade above, doesn't break above. And then we break below the AR level, forming the SOW, sign of weakness. Now, one thing I've noticed is usually some schematics that I observe, they don't have the sign of weakness like the ST. From here, we trade down, but it will close above the AR level and then forms an upthrust in Utah, UC Utah, upthrust after distribution. So that's one thing you want to look out for that I've observed. But yeah, so going back, PSY, BC, I believe that's what the bias climax is. The AR, I think that's an automatic reaction. I think, I'm not forgetting. But ST closes below the BC, does not break above. But then from the ST, we go on to break below the AR, forming the sign of weakness. I believe the psychology behind it was like, oh, people see this making a lower low, closing below this low, these two lows here, this one, closing below these lows, making a lower low. So the market is going to start selling, but then the market quickly comes back and breaks above these highs. So notice I wrote in the notes here, 2 highs broken to form the upthrust, which are the BC and ST. So usually that's what I like to see. When I see 2 highs, the BC and the ST, the upthrust clearly breaks above both of them. Ideally, that's what I want to see. And then this could be seen as a break of structure. So when price comes down here, using points of interest entry strategies that we've spoken about, then find the buy area here and then take it higher to form a higher high. But that's obviously with practice and studying and backtesting. So once you form that upthrust, price retraces, breaks above the BC, ST levels, retraces, and then forms a higher high, which is then the UTOP. And you can see in the UTOP process, the upthrust after distribution, that's when price starts breaking down before the sell-off. And we have the LPSY, and price starts playing some price action as it sells. Second distribution schematic is a bit different, sort of like the accumulation one. Notice how we don't have, in this first one, we have a UTOD. In the second one, we don't have a UTOD, we have a LPSY. And just as the way the accumulation schematic has the head and shoulders looking pattern, so shoulder, head, shoulder. Distribution likewise has the same. So the BC is what I identify as a shoulder, upthrust is the head, and then the LPSY, that's the shoulder. And then we start setting off. So once you train your eyes to identify or recognize when Wyckoff is in play, you can then use it to determine what phase of the market we are in currently. And you can use it also to get clean entries when price enters your point of interest area. So examples. This is EURGBP, a screenshot from a trade I took. This green area I highlighted is my point of interest area. It was on 2 hours. And then I stopped trading my Wyckoff. So how you trade Wyckoff, for the most part, is completely unique to yourself. So for me, this was originally my PS, but because this made equal highs, which we identify as liquidity, we know retails love trading this, and we know these highs are magnets to be swept, liquidity to be taken. So I identified as my PS. BC, we trade down. So this is the move down to go high. We come back down into that area. I believe that was a 61.8 retracement around there. And then this is a SC. Now, if you remember how I mentioned, sometimes the SC doesn't form that sign of weakness, but it then goes on to form that upthrust. This is sort of me adjusting to what the price is doing. So I identified this as a ST. We came back down, upthrust, trades higher, and then upthrust after distribution. And then we see how from here, price starts trading, and then we break below this low and this low. We break below it. So this candle area was my point of interest. Price retraces. This little liquidity line, trend line that was being built here got taken out. My entry came in, and then price started selling off. So this is exactly an example of distribution in play on EURGBP. Another one is the NAS 100. Now, typically, a trick I use is when I'm looking at the NAS 100, I also look at US 30 or XPS 500. They move identically, but not exactly the same patterns will be displayed. But generally, wherever you see the NAS doing, the US 30 will follow, and the SPX 500 as well. So we can see here prices marking down or expanding, selling off, however you want to call it. And then we get to this level, and then it starts looking like it's slowing down, then it starts going sideways. So I identify this as the PS. You come here, SC, ST, spring. So this is my 1, 2, 3 spring. So you see, in this case, I only identified the low levels. You notice I didn't mention the AR. Let me open up. So I didn't mention the AR and all these other highs, all these other highs. I will focus on the lows, because in accumulations is the lows that are the main focus. For me anyway, that's what I've trained my eyes to see and being more profitable with that. So I focus on the lows in this example, PS1, the SC2, this level here, this SC point I highlighted, sort of equal lows to this wick right here. So I could have drawn a trend line, even just this 1, 2, that would be my SC level. Same way I did it here with the PS, was on the same level. And then we have the SC. And then finally we have the spring. Price starts trading higher. We retrace. This would be your test. Just as we have, this would be the test for me. And then got my entry. And price starts going higher. So this is the NAS 100. US 30 had a similar schematic. So this is during the same period as this was going on. This was also playing out. So from here, PS, SC, just like we have the same level, equal lows. So these two levels would be my SC, just draw the P2 line, trend line across it, SC, and then we have the spring. But in this case, US 30s didn't break above the previous high after forming the spring. The NASDAQ did. We have a higher high here, releasing to this previous high. But US 30, this is the previous high, but we made a lower high here. So that's why I primarily use the NASDAQ when looking at Wyckoff, because the US 30 tends to lag along with the SPX 500. And then as I got the spring, this would be my test. So after the spring, price trades higher, we trace this to form the test, and then we start marking up or expanding. Another example, this was when price came into my buy area. I believe this is USD CAD. So I didn't get the full screen, but you can see I identify some PS, net flow, SC, see how we have equal levels again. You can almost see when we have SC, they form liquidity along that level, or equal lows, double bottoms, same thing. And then the SD comes, and then the next low, spring. So again, just looking at the lows only, 1, 2, 3, spring. And then we have the test. And then we have another one. You can see where we have the zigzag, like 1, 2, 3, 4, 5. Same thing here, we have like 1, 2, 3, 4, 5, and then starts trading higher. Exactly how this played out nicely. And you can see just the way we've been identifying entries, that's exactly the point of interest our buyers came into.